Welcome back, Alpha Hunters. Hope everybody is doing well this week. The markets have closed out the month of April, so the markets are closed for the week of April the 28th. And let's take a look and see what we got going on this week. So in last week's video, I kind of mentioned I thought there would be some bullishness on Monday and Tuesday, and then probably see some bearishness come in Wednesday. Wound up not being the case, as Monday really wasn't bearish too much. It was kind of more of sideways. We had an early little pop, and then we had a drop, and then we kind of just had to settle out for the rest of the day. Nice little uptrend. Tuesday was the day where we saw some activity come in. A lot of the Tuesday gap down had a lot to do with regional banking issues coming back up, as we've been in earnings for regional banks and transportation stocks having their earnings cycle. So we'll get into some of those earnings stocks a little bit later, but we did have a gap down, and pretty much we just traded down almost the whole day. Pretty much the whole day. We had a couple moments of bullish activity, but not really much. I mean, we traded lower pretty much all day. Yeah. We got to Wednesday. Okay. So Tuesday after the bell, we got to Microsoft and Alphabet earnings. And Microsoft did pretty good. Google, not as much. So the SPY pretty much opened flat. And, we had a little bit of a sell off. Then we had a rally, tried to rally in techs. And then the market then sold back off, kind of ending towards the daily lows, not at the daily lows, but kind of down there. But Tuesday and Wednesday, a lot of it was just smaller cap type stuff. The IWM, the SLY, that kind of stuff was just getting hammered pretty much both those days. And those are kind of at some of the lower ends of really kind of, the March lows. So they're a bit oversold. They need a little rest before they probably break down again. They most likely will here over the next month. But Thursday, we got Meta earnings Wednesday after the bell. So we gapped up from that and then just steamrolled higher. And really one of the things that was kind of interesting, how I was just mentioning small caps were just getting annihilated Tuesday, Wednesday. Well, big tech stocks were actually doing its best to hold the market up on Wednesday, and they did pretty good early Thursday. And then they started taking a back seat, and then everything else started to kind of rally as it was kind of coming off some lows. And we just saw the market kind of push up pretty much the whole day on Thursday, just continue to rally, 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 rally. And it was such a strong day for the bulls. It just basically carried into Friday, as we got a little bit of a gap down here on the S&P 500, the SPY, from Amazon earnings. Not exactly the brightest of the tech earnings this week, but we had a strong push. Initial hour was very, very strong, and then just had a quick little pullback on a lot of things, and then it just slowly grinded higher up until the middle part of the day, and then just kind of very subtly pulled back and then pushed to end out the week. Basically took out last week's monthly high in the last 45 minutes and even this last 15 minutes, closing really almost on a shave top at the monthly high. Taking a look here at sector performance for the week, and we can see energy started off the week pretty strong, but gave it back as it kind of ended pretty much below the S&P 500 for the week. The utilities were doing pretty good going through Tuesday, and then kind of fell off as the rally then happened Wednesday, Thursday, Friday. And you can really see XLC, the two heavyweights for the XLC, Alphabet, Meta, both had earnings this week. Obviously lifting up the XLC pretty good in the second half of the week. The XLK was second best on the week, as well as the real estate. Now, the interesting thing about the XLK is they actually were the biggest underperformer going into the end of day on Tuesday. And then obviously Microsoft earnings Tuesday after the bell really helped rejuvenate that sucker and get it going. Staples pretty much in line with the market for the week. Energies, financials, utilities, materials, and discretionaries kind of all clumped together right there. Then you got healthcare and industrials at the lower end of the week. All right, taking a look here, week over week options chain. So obviously April 28th just dropped off, but not too much really kind of shocking here. Obviously, we're still seeing some puts still being bought out there and a lot of expirations higher than calls. There's a few expirations out there that had more call buying, like this May 19th had more call buying this week than the puts. We actually had some put selling out here in September, week over week. So that was kind of interesting. So we actually saw a reduction in puts at that expiration. But the two largest options strikes right now are this June 16th monthly and this May 19th monthly, which is about 3 weeks out. All right, taking a look at this again, the Fed meeting coming up for this next Wednesday, May the 3rd. 80% probability that we do actually get a rate increase of about 25 basis points. So it seems like the market is just basically pricing that in. That's kind of interesting. It actually did drop here day over day and actually week over week. But what's kind of interesting is you go to June, we're still seeing an elevation of maybe another quarter point rate increase going out to June. So, maybe 25 this next week, and then you get to June, maybe another 25 on top of that. Just kind of interesting to see those odds have been ever increasing really over the past couple of weeks. Now, I know week over week, or really even, day change, it actually dropped pretty good. But they have been ticking up over the past couple of weeks. So it's just going to be interesting to see when we get to Wednesday, Thursday, Friday this next week, how much the odds are really going to change for June. And maybe we don't see a 25 basis point. Maybe the Fed actually does come out and mention, hey, you know what, we don't feel like we need to raise anymore, or some kind of tone like that. Maybe not be as blunt, but maybe something along the lines of, we feel like we're probably done. Maybe some commentary like that. But it's just going to be interesting to see how some of these farther out months maybe change on some of the odds of higher levels of interest rate hikes, maybe staying at those elevated levels, or do they start to price in lower levels maybe going forward. All right, let's run through some of the basic stuff we kind of go through every week. But the VIX dropped off pretty heavily Thursday and Friday. So the VIX, with how much it dropped, and we barely squeaked out a new high on the SPY week over week. Okay, I know I didn't look at like the daily chart or the weekly chart yet, but we will in here in a second. But you'll notice like we barely squeaked it out, and you can see just how much the VIX has dropped off. Taking a look at the dollar, dollar's pretty much flat week over week. We started basically right here, and that's about where we ended. So we're a little bit down on the week. Not too bad. This daily picture with this huge upper wick here does not look good. So I could definitely see us continue to kind of chop sideways. If we break down, I wouldn't be surprised with that upper wick. But the other thing is, if we do get to the Fed day on Wednesday, I could see some of the market reaction coming out of that and pushing it to where this thing kind of starts to bounce a little bit. Taking a look here at 10-year yields, definitely still hanging in this lower area it's been in for kind of the past few months. So kind of in this lower area. We'll see what happens this next week. Obviously, Wednesday, we're going to get a pretty clear indication of which way it's probably going to go. Honestly, the past month and a half, 2 months, it doesn't look like it's going to start to continue to climb or continue to climb. It looks like it's probably just going to continue to break down. Taking a look here at the 10 and 2-year yields, and we can definitely see we're still just hanging out. We saw early week strong move higher, and we actually took out this little top action that we had back on April 14th, April 13th. So might be a little change of direction here. So we'll have to see what kind of comes out of the FOMC meeting this next Wednesday, and maybe that starts to push this thing higher. Remember, if this thing starts to really scream higher, it most likely means that we are about to see major bearish action on the market. GLD kind of just been hanging out. Not a lot of movement this week. It seems like a lot of things, not the SPY, not the Qs, kind of just hanging out this week. A lot of them, and maybe they're just waiting for this next Wednesday, see what the Fed does. But yeah, just kind of hanging out. Not a whole lot of action there on the GLD this week. HYG very much seems like it's just kind of consolidating in here. Looks like it's about ready to push up. If I even turn on the 100, 200, you can see it's above all the moving averages. Seems like it wants to push higher. But again, FOMC this week, we'll just have to wait and see. The LQD also seeming like it wants to kind of push higher. Nice little consolidation that's been in here for about 2 weeks now. So looking pretty good. So we'll just have to wait and see on the LQD, kind of like the HYG. We also got the Federal Reserve balance sheet data that came out Thursday after the market closed, and it dropped pretty good. It dropped about 5%. It's getting back, kind of back down to these lows that it had back in October, November and stuff, or at least this bear market, lows. So some of those areas that it was kind of at back in like October, November. So I would just continue to expect this to probably continue to drop off, which is another thing that's going to continue to put pressure on the markets. All right, taking a look here at Microsoft. We're going to run through a few stocks that had earnings this week, but Microsoft obviously crushed it. I mean, they crushed expectations, their future vision for what they're expecting for AI. Really, one of the interesting things about Microsoft is they're not really trying to develop AI. What they're doing is very smart. Is they're actually hosting all these companies that are trying to develop AI in their own cloud. Obviously, they're working pretty closely with them, trying to make sure they can develop it. They're not trying to compete directly with Google and trying to make AI. They're just trying to say, hey, you know what? All you guys that want to make AI applications or services, you know what? Come host it here and we'll kind of help support you. And that way they can probably then basically see the data on the backside, who's doing the best, and then probably go acquire them before they really start to blow up. That would probably be my guess, my business take, just because that would be really smart. Speaking of Alphabet and Google, very interesting week. They had earnings the same day as Microsoft, but they did not perform that well on Wednesday. They actually performed their better day was actually on Thursday after Meta had announced their earnings, and basically everything ripped on Thursday. So Alphabet got a little bit of that uptick on Thursday. So I mean, between Microsoft and Alphabet, man, I'm not really bullish on either one. And honestly, Alphabet isn't looking the best. To me, they have the most to lose. I'm not saying be bearish on Microsoft. I would say if you do own some Microsoft shares, I'd probably moreover just sell them right now, just where we are in the marketplace. But as far as Alphabet, I could make a bearish case, like to be bearish on them. And I'm not talking about 1-day options or 0-day options. I'm talking about like for the next several months, maybe even going into the end of the year and kind of see what happens possibly on a hang up here. Because stock performance is not doing what other big tech stocks are doing, especially here this week, which is a very telltale sign about Alphabet. And also remember, they own 90% plus of the search market, which is a huge like moat. Like they own the island. So they are the ones that have the most to lose if AI starts to take off and people start to dump and change their habits away from searching for things and using AI chatbots or whatever services. Meta, I don't really know what to think about Meta here. It's been on one heck of a run this year. I mean, if you really want to know how strong Meta has been, it's up about 99%, 100%. It hit 100% basically on Thursday. Pretty much closed this week out up 100% on the year. And honestly, I don't trust Zuckerberg. That's just kind of where I'm at. I don't trust him. Remember last year, it was all about the metaverse. They changed the company from FB, Facebook, to Meta Platforms, and they're still dumping billions of dollars into the metaverse, and all while they're trying to talk up an AI game. And why wasn't he mentioning AI a year ago or 2 years ago? So to me, I don't trust Zuck, and that's just kind of where I stand on Meta. Like, there's not much else to say. I wouldn't be trying to be bullish here, but I don't know if I could be bearish unless it filled this gap from earnings back last year on this Feb gap down on earnings back in 2022. If that filled, and maybe it happens, I don't know, sometime soon, maybe in May, just explodes higher, maybe I'll take a shot on it. But for me, I just don't buy into their AI hype. I just don't. That's just me. Amazon also had a kind of a lackluster week. They actually had pretty decent earnings numbers. And if you really kind of want to see, let's take a look at the 15-minute, and I'll turn on the extended hours trading. And you can see after the bell Thursday, they popped higher about 10%. They went up over 120, over 122 even. And then reverse course, came back down as they were kind of talking about economic conditions and seeing some contraction in cloud spending. That was a big deal that they were kind of talking about in the earnings call. So that kind of reverse course. The retail side of business basically was not nearly, it was not good. I mean, everybody was focused on cloud, and that's one reason why it popped. Cloud numbers were really good, really profitable, but they're still seeing, I guess, some headwinds as far as like spending, as far as what we know. I mean, all we know is what they tell us. So that was kind of just what they said. And I'll be pretty honest, this is another one that's been kind of lackluster. And I think they really do need to split up. They need to split apart AWS and Amazon, the retail business, just because like it's so hard to analyze this company. I mean, they do give you really solid information about the economy on the retail side, and we can talk about that here in just a second. But as far as like the cloud side, like they're doing really good in the cloud. They're the number one revenue generating cloud company out there. So yeah, they do pretty good. It's just I just don't know. To me, they got like a dead weight. They have a business that is really cost heavy, but it's not really helping the stock at all. That's kind of another point is they have two kind of completely different businesses and they're trying to manage both. But Microsoft, like their main competitor in the cloud, Microsoft's focused the cloud, right? They are laser focused in the cloud. So yeah, it's just kind of a different situation. I could definitely see Microsoft probably overtaking Amazon probably here in the next 9 to 12 months in top revenue cloud growth. So the last thing I'm going to say about these major tech earnings that we had this week, they talked a lot about AI, and really, if you've kind of been paying attention to AI, it's very intriguing on what AI is going to be able to do. The main issue that a lot of people are not paying attention to is cost. Okay, and we've had a couple of companies actually come out and mention like AI is way more expensive than just search. Google's mentioned it's like 10 times more expensive. They got to build out way more infrastructure for it, so much more servers and stuff like that. And I mean, we haven't even seen like, AI really reach kind of full potential. So to me, I think there's too much hype about something that's going to be really earnings viable, probably years down the line. That's just kind of where I'm at with it. I think it's going to be years down the line before it's really much more earnings viable. I think it's going to be more of a race to lock in kind of, AI and AI structure, infrastructure, see what AI works on the business side and consumer side, because they probably won't be the same, and then figure out how to monetize it. Because that's going to be the other thing is they're going to build out the infrastructure, and nobody's really monetizing AI unless they're actually like paying for the subscriptions and stuff like that. So it's going to be very interesting to kind of see how it plays out. But to me, earnings are probably going to continue to get compressed. And I would imagine among a lot of these companies, we are going to continue to see them revise down earnings expectations as we go through this next quarter. It's going to be very important. Pay attention to that because they probably will do it. All right, looking here at JBHT. Why are we looking at JBHT? Because they actually had earnings last week. Well, why are we talking about a company that had earnings last week? Why aren't we talking about it last week? Well, it was something that they said last week, but not too many people really took it too seriously. But they kind of talked about a reduction of basically, freight packages. Like they were seeing just a reduction in freight. And when we get to this week's earnings of Old Dominion Freight Line, Old Dominion basically said the same thing. Here's the interesting. If you want to know why the market sold off Tuesday, UPS, baby. UPS came out and said significant reduction of freight. Big tell about the economy. If nobody's shipping anything, that means there's a serious lack of demand, and then no one's buying anything. So there's nothing to ship. Kind of interesting. And we're not just talking about like packages to your home. We're talking about like freight to stores, warehouses, all that kind of stuff. This is a big thing that kind of went on this week. Was a lot of the freight companies also had earnings this week that kind of hit the market, especially on Tuesday and Wednesday. But we first heard about it last week with JB Hunt, and then this week a lot of other companies, especially larger ones like UPS, came out and kind of confirmed it, and they actually said it's even worse than what they mentioned. All right, taking a look here at the equal weight S&P 500. Very interesting that we definitely see that the RSP is not as strong as the SPY. We really know it's outperforming on the SPY side. It's the big tech stuff. But we do have this downtrend line. The last time we kind of got through it back in February, we came right back below it. So it seems like we're going to probably make a run early May, probably up to that line. We'll see if it holds over that. Yeah, I'm not really digging the super strong bullish activity, in my opinion. I still think we're kind of in like more of a sideways, choppy market. I think we'll probably come back down. This is probably where we start the downtrend or rollover on the RSP. The DIA, the Dow Jones. It's been smacking into this kind of support and resistance line for a while. Obviously, getting and mixing into it today. a little bit, closing a little bit over it, but it's really more of a zone. I just like to put lines because then I have the zones all over my charts. So yeah, it's just kind of meant to say, hey, this is kind of an important zone. Obviously, we haven't really gotten over this zone too much. A few times that we have really over the past several months, we haven't held and we've come back lower. The IWM, ever since the all-time highs, I mean, we had a quick sell-off all the way back into June, and then it has gone sideways at these lows. And this is where the market has seen its biggest weakness, honestly, with like regional banks in March kind of pushing it back down to these lows that it's kind of had. Going all the way back to June, July of last year, even October, September. So yeah, it's one that seems like smaller cap stocks are about to lead the market lower, and then when they get super discounted, it seems like big tech stocks are going to get liquidated. They're going to get sold off, and people are going to come buy in to the IWM small cap stocks, as there's going to be a lot of great opportunities out there. All right, taking a look here at the Qs. Probably do trade a little bit higher this week. I'm going to show you why. We're taking a look at trying to find out some situations for possibly the stock market this next week. And really, if you take a look at this first sell-off from the all-time high to the low that we hit back in June to the bounce back, the rebound, the retest, whatever you want to call it, that we went up about 45% or so, around that. We didn't quite make it 50%, right? We didn't quite make it 50%. This solid green line right here is about the 50% level. So if I take this and extend it back down to the lows that we put in October, you can see that we're about there. Maybe we push a little bit higher, or maybe we do come all the way up into the 330 level, which was a major resistance before and kind of support even back in March, April. Maybe we do come up into that level, because that would also be the 50% retracement area. So maybe we do see the Qs push a little bit higher. So maybe, let's say maybe 1% or so higher, maybe 2%. Sorry, there we go. Push higher, maybe 1.5 to 2.5% higher, maybe possibly over the next week or two. Just gonna be interesting to see really what the Qs did, because obviously they did end out the week on a very strong and positive note here at basically taking out April's highs. So they look primed to at least push a little bit higher. Maybe it doesn't hold, but it basically also filled this gap from August today on Friday, and yeah, it looks like we'll probably just push a little bit higher. But this is the Qs on the weekly time frame. You can also see about that same price level around 330. We're also going to have the 100 moving average on a weekly. Okay, so looking here at the daily on the SPY, very interesting. We ended right at the highs of the month. We basically snagged the high that we put in back on April 18th. And pretty much the last like 15 minutes, we just snagged that high, just kind of went up a little bit, basically ended today at the monthly high. So not really much else to say about that. But I do think since we ended so much at the high, like basically at the end of the day, we will go higher, whether that's Monday, Tuesday, or maybe even Wednesday. Okay. And this is kind of what I'll be watching for as we possibly go into this next week. Okay, if we do not gap up over on Monday, but we gap down a little bit, now it'll be really cool to see the SPY kind of gap down a little bit and the Qs actually gap up, and then we just see them both kind of sell down, maybe sell down a little bit Monday and Tuesday. Not a total crush job, and then we get to Wednesday. So Wednesday would be kind of important if this happens, or Monday and Tuesday we sell down a little bit, we don't take out this high from Friday, and then Wednesday comes and we get a wick that breaches those highs, or Friday's high, and then we come back down. Now the other few interesting levels to be aware of is one, February's high back on the 2nd is around 418.31. It's going to be very important. Just above that, okay, just above that, I actually have a red line here. SPX 420 or 4200 is around on the SPY around 418.87. That red number right there. So it's going to be interesting to see kind of how the market reacts in this range. Okay, if we don't take out the high Monday and Tuesday, I would be very cautious about a wick up and then maybe a sell off on Wednesday. So that's just something I'll be looking for. If we do trade up over it on Monday or Tuesday, Friday's close is kind of what I'm talking about, then I'd probably just be adding to this longer term bearish position I do have out to October. So I'll probably just be adding some more to that. And then I'll see kind of how things develop throughout the course of May. But if we do hold over SPX 4200, like SPY 418 and a half or something like that, that'd be about that area. I'd be really interested to see kind of how we develop on the market as we kind of go through May and how long it lasts. I would imagine we probably start to see more bearishness as we go towards the end of May. I don't think we're just going to go straight selling down to 380 by the end of May. I really don't. Like, do not expect that. Do not have that expectation. Like, if that happens, I'd imagine we're probably down there by July. Maybe August, but probably like July would be my expectation. So really, just to recap real quick, my game plan is if Monday we get up over Friday's high, I'm going to add more to that bearish position. If we don't, I'm going to do it probably on Wednesday because we'll probably wick up over it. I'll be curious to see if we actually do ever take out this February high. And if we do, we got SPX 4200 right above it. And there's been a couple of major banks that have said anything over 4200 on the SPX is a straight sell. So we've seen that come out from a couple banks over the past couple of months. So we'll just see how the market plays. But with all that being said, man, this is like a horrible spot to be bullish. Let me just zoom this kind of back out here. Like, we first got back down into this zone all the way back, May of last year. We've been in this zone for about a year. We are at the upper ends of the trading range that we've been in for about a year. So people that say, hey, follow the trend, we're above the moving averages. Their moving averages don't work in a sideways market. Shocking, but they don't. They do for maybe a short period of time, but they don't work. Like it's not it's not viable to keep following moving averages because by the time that they work for you, you're at the top end or the lower end of the channel, and then it's about to reverse and go in the other direction. So just be tight with your stop losses, be risk adverse, understand your risk limits and that kind of stuff. But I don't have great expectations for May. I really don't. I was really actually kind of surprised how strong we moved Thursday and Friday. And to me, these 2 days seem like the blow off the top kind of last move that you're going to see in kind of a bullish move. So I wouldn't be looking to be strongly bullish, and I'll be pretty honest. It's probably just not a bad shot to take some off the table if you have been bullish. Alrighty, Alpha Hunters. Have a great weekend and take care.